Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Tuesday, December 10th, 2024. What an interesting day. You know, all I heard were the terms on CNBC today as listening, lost momentum, lost momentum, lost momentum. I heard it, I must have heard it 50 times on the station today. And I think they're right on that. And what it really boils down to is, where are you in time? And that's what makes the most sense to me. First off, this is the week you normally in stock indices break back. How deep is the question, but it's often the case. You don't have to believe me. Go to your historical charts. Go get on some of the historicals. Take a look at what the market does. You can break it down 50-year, 90-year patterns, 15-year, 5. I do it all the time, and that's where you're at. You're in this period where you normally get that. Why? Well, you got tax planning, you got people in markets that often rotate their portfolio, you've got what else? CPI, PPI coming up, and the Fed right now. Now, sometimes CPI, PPI don't take on the importance that they do right now. But right now it's real important because you have a Fed that wants to cut rates, and the question is, can it cut rates? And that's the big issue that's facing us. Inflation is sticky. How sticky is going to be the key. So tomorrow morning, when you and I take a look at things, you'll start off at 6 in the morning and get an idea of what the mortgage bankers are doing. But all you got to do is look at the housing stocks, Toll Brothers or the XHB, and see what's going on there. It's like that right now. Okay, so rates are just too high to get anything really going. Then we look at the big boy tomorrow. And the day after, by the way, Thursday, you get PPI. But you got the November price index. So the raw data is being forecast to be up 0.3 month over month. And that compares to last month's reading of only up 0.2. So right off the bat, it's a sticky number. Core CPI is expected up 0.3 compared to October's 0.3, and CPI on an annualized term is forecast up 2.7% from the year ago month, and the core year over year is expected up 3.2%. Those are not weak numbers. They're not super strong anymore, but they're certainly not doing what the Fed wants and chopping the axe down and taking that tree down with it. It just isn't happening in a big way. Weekly petroleum estimates come out at 9:30. So the big question is, does the Fed, with its crystal ball, and we pray they look forward, see weakening in the economy? And if they do they cut? Do they, in that same ball, say, no, we're not seeing the weakening we want? And do they have the guts then to say, if that's what they believe, now we shouldn't cut rates right now? That's why you're getting this right here. The market's trying to figure this out. The one thing that you know is the Fed's not going to be as aggressive as we thought they would a year ago at this time, or even in June. Remember, we kept hearing how low rates are going to go. Now the new neutral rate that many people are talking about isn't down at 2.5%. It's more like 3.5%, somewhere in those numbers. I've seen people say it's 3.75. So we have to find out where that's going to carry you. All right. So as I said, this is the time frame where you normally come down here. This is a whole week in all these different currencies where you're starting to get the central banks. Today you had Reserve Bank of Australia. They held at a very high rate. The market is reeling. I already did my report for tonight showing how the economy is getting hurt by the restrictive action that they've got. You get the European Central Bank, and they're coming out Thursday. The Swiss National Bank Thursday, and tomorrow the Bank of Canada comes out. Brazil's coming out tomorrow as well. And then next week, we get into Japan, we get into the United States, Bank of England. So you've got your hands full right here, and that's what you normally expect. But for the U.S. stock market, we're looking at CPI, PPI, and what does the Fed do? And that's all staring you in the face. So be ready for it is the point that I'm making. When we take a look at the S&P, the market is down midweek. It's hard to say, believe that. 0.8%, not a lot, 49 points in the S&P. You can see how the market has given you that little bit of a break. It's still got a pattern of higher lows, higher highs, bigger supports here at this 60, 18.5 zone. I don't know if it can get there or not, but that's another 30 points away roughly. And if the market starts up, I think that you're targeting the 61, 41.5 zone as a potential upside target. Do I think Santa Claus is going to come? Yes. Do I think he's going to come late? That's the big question. There's two elements that you look at on the Santa Claus trade. Which date do you pick is the key. I'm not going to give you both dates. They're in my report. When you take a look here, this is what you've got to be careful of now. You're losing, the word is present tense, losing, not past tense. You didn't lose the bullish embedded reading with the close under 79, but you're certainly getting it right now. You need a strong day tomorrow to avoid that. If you lose that reading, the odds favor price and the red line are going to come together. That doesn't end the trade that I'm talking about for Santa, but that's the loss of the momentum. And what you're looking at right there when you're hearing this out of CNBC and Bloomberg, it is the loss of momentum. We had all these tech stocks, everything else going up wild, and suddenly the pullback is happening. Look what happened in Oracle today, to just give you a look-see. Pretty wild action. Same thing happening, knocking on the door of losing the embedded reading here. The Dow lost it already, and it's down to its target. And last we get over to the Russell, same thing, the loss of momentum. Could the markets go deeper down? Sure. Will they still rebound for Santa? I think so. Does that mean you'll go up to the highs, though? You may not. It depends how deep this current break between, in my opinion, the CPI and PPI numbers carry the market. And that's when I think the market makes its decision, because you'll have an idea what the Fed will or won't do with these two numbers. The market tonight, polls that I'm reading, 90% probability the Fed's going to cut next week on the 18th. So keep that in the back of your mind. When we look at the notes and bonds, loss of bullish momentum. You've lost the bullish embedded reading, loss of bullish momentum. This is the loss of momentum we're talking about. The dollar had lost it back here. Now the question is it losing the bearish momentum? It's the flip of all the others. Is it starting to turn up? Right now it's at a key resistance number of the 18-day average against these prior two highs on the chart. The euro, I would expect it's going to be very neutral going into Thursday. Right now, you don't get more neutral than that. The overall trend is up. The momentum is flat in the market, and resistance is right here, 105.36. When we come to the British pound, it has gained nicely against the euro. That's the one thing you're looking at. We're coming up. We know the Bank of England would like to see cuts coming. The question is, can they do it? Is their economy doing well enough where they don't need to do that? That's the big question. A lot of resistance right here at the upper Bollinger Band to the 200-day average at right here at 128.28, right in that general zone. So I'm just looking at these markets now. When you get ready for bank meetings, understand it's like you clean the table and then you start fresh. In Bitcoin, when we had lost back here, the Bollinger Band, I was telling people you're going back to the 18-day average. It's a high probability. Does it work all the time? Of course not. I don't know any technical pattern that works all the time on daily charts. Now, you might tell me, oh, it's going to work on a yearly chart if you do this. Okay, but how much resistance, support, how much financial woe do you take to get to whatever that's going to do? And see, that's the problem with people. They don't understand. If you're going to trade futures, what works against you, not for you, is leverage. Automatically, it's 80-90% leverage. That's how the contracts are built. Now, to take that out of the market, well, why do that? That's the whole purpose of what the markets are. If you want to take the leverage out, you trade the same thing like crude oil, go to USO. I'm not saying to go there and to take it out. There are times I just want to trade the futures, and there are times I'd rather trade or put out recommendations, because that's what I do for people. But yeah, I do have an account, and I tell people what I think they should do one way or the other. And there are times to be in futures, and there are times you're better off in the ETFs. I mix and match. I put out services on both for that reason. You've got a higher high, a lower low, and you're in the middle of no man land right here. Higher high, lower low, in the middle of no man land, sitting at the 18-day average. In a downtrend in heating oil with all this cold weather coming, which has me going, why isn't this market bouncing? Now, you've lost or trying to lose the oversold condition, but you still have a lot of resistance here at 221.11. To negate the charge, you got to get up and over that and get through that high. This is the zone that the pros, do you think they're selling? I don't when you're oversold like that. Nat gas, again, oversold conditions. Anytime you have numbers under 30, they're oversold. I teach, which doesn't mean it's right, that when you're oversold, you're not looking to deploy new capital to the bear side. You're looking to see what is the market going to do. And I'm looking at this market, and I'm expecting it to have a lot of resistance here. I think, period. I think the fundamentals in this market are very bearish. I think that you're getting a lot more natural gas storage. Under Trump, you're going to have even more. You're going to have everything that the Biden administration cut down for natural gas, trying to come back with it. You're going to see a very, very friendly president to energy. Keystone, could it be revived? Who the heck knows? See, you put it all together, you try to come up with these game plans, and that's exactly what I try to do with you. So first things in the morning, we go through the charts together. I'm not talking these free, I'm talking my subscriber videos. Game plans, you do your best with it. Second thing I do, I give everybody a shot to see the type of thinking I have with these special reports. Take advantage, give it a click. See if you like what I say and why I say it, and I'm already preparing which one I'm going to do next week. These reports are only up 3 days, and then after that, another group comes out. I'm Ira. You have yourself a great evening. I'll catch up with you all in the morning.